Hey there, ladies and gents. Jed Bratt here with the Real Estate Jedi Big Block Realty. Just wanted to give you a quick market update as of the beginning of March. This is going back and looking at February in San Diego County. Again, we're looking at detached houses, single-family houses, condos, townhomes, twin homes, and all other type of attached units, all right? And this is just going to be a quick one, just touching on some of the main key points here. I'm also going to... I think I'll put the graphs overlaying on here for you so you can kind of see what's going on. Active listings, this is our inventory again that we've been seeing come up and up and up abnormally quickly over the last 6 to 8 months. Actually is slowing down on its increase. Actually, it's only up 19.5% year over year. If you recall back at the end of last year, and even in January, we were looking at closer to 30 to 40% up year over year of inventory. So that's actually coming down a little bit. Pending sales are up 1% year over year. So actually, that's sort of a lagging indicator, right? If we see pending sales shoot through the roof all of a sudden this month, we're typically going to see a few more closed sales the following month. So if pending sales are up 1% year over year, which is another indicator we've been seeing that's been lagging over the last several months in our other market updates, that is sort of pointing towards an expected higher closing amount again for the month of March. New listings are down 7.7%. Again, a reversal from a lot of the trends we were seeing before. We were seeing lower pending sales, more active listings overall, and contributing to that much higher rates of new listings coming in the market. Now we're down 7.7% for new listings. So that means less new listings are coming in the market. Again, contributing to the challenge with inventory that we felt before. And a resulting 20.2% down in sold listings year over year. Now, what's all this mean, and how does it come into play, and what's kind of causing this, or why was the market slowing down so much at the end of, or early to end of last year, and why are we kind of seeing this reversal right now? Well, in my opinion, I think a lot of it has to do with interest rates. If you've been following the news regarding the Fed Chair Powell had made some announcements leading up through December, indicating that they were still planning on raising interest rates another 3 or 4 times this year. I think with 3 being pretty much the target number of times they're planning on raising interest rates. That said, they still went ahead and raised rates in December, but it didn't have the same impact as was expected. Again, we talked about this before. If there's not a whole lot of demand for money, then ultimately speaking, it's a supply and demand market. So even if interest rates are higher by terms of the way banks are borrowing from each other, it could still result in lower interest rates in the mortgage market, for example, because the Fed doesn't directly impact mortgage rates per se. It's kind of like a secondary influencer. That said, when they raised rates in December, we actually have seen rates come down significantly from their highs in November, which is just under 5% just under 5% nationally, 30-year fixed rate on average, okay? So I think we're about 4.94% in November. Right now we're around 4.35% nationally, 30-year fixed average market interest rate. So that's a pretty big discount. Actually, the last time we were this low in interest rates was 12 months ago. So this same time last year. So I think buyers are kind of getting off the fence. They were maybe worried that interest rates are going to continue to go up. But since the Fed Chair Powell has kind of calmed down on his expectations of what he said he's expecting to do, it sounds like he's going to take a more conservative approach to interest rates in the coming months and this year in 2019, but we shall see. So, barring any crazy other changes from the Fed, I don't know how long this is going to continue right now, but if it had continued the way we were seeing it before, then we would continue to see a drastic increase in inventory, which of course eventually is going to give some pressure on prices in a downward stance, whether that's directly via prices or concessions or some other sort of buyer concession, whether it's price or credits. But anyway, that said, hopefully that was helpful. And of course, if you have any questions about any of this, let us know. And we will be making some more videos in the future, maybe diving a little bit deeper. This was just kind of touch on where we are currently. And of course, if you haven't already, if you wanted to watch the video that I did on Bruce Norris's expectations for the coming year and several years in real estate, in California real estate, feel free to check that out on YouTube. I apologize if that video was a bit dry and slow. It was a lot of data, and I was trying to cram it into one video, but nonetheless, the main bullet points are in that. If you want to watch it, check it out on our YouTube channel. As always, thank you for watching. If you found this helpful, feel free to share it with your friends and family, and I will see you in the next video. Thanks for watching.